Hello everybody and welcome once again to the weekly wrap-up from forexlivetoday.com. Looking back at the week that was in the currency markets and more importantly looking forward to the outlook for next week. Today is Sunday the 23rd of October 2011. Okay, let's get straight onto the charts, and the first chart that we're going to look at is the S&P 500. We can see our 2-month range here, and we can see a breakout. Now, if you look back throughout the course of the week, this is a daily chart, you can see lots of chop, down, up, and it wasn't until Friday, and if we go to an hourly chart, if it just updates, there we go, you can see it wasn't until late on Friday where we had the breakout, retrace, which possibly fooled a few people, and then broke out again. You could almost say we have a breakout, a back test, and onward. Now, usually you would think, alright, a risk on move. And if we look across to the cable, pound dollar, you can see our risk on move is confirmed here with another clear breakout above resistance. Looking good for the bulls, one might think. So what caused this? Well, this QE3 talk just will not go away, will it? Once again, outright purchases being advocated by the powers that be in the US. No real solution in Europe as usual. It's just going on and on and on with kicking the can down the road. However, we do have the EU summit happening as we speak, but also on Wednesday there will be another meeting. So let's look at our opportunities, because there are definitely opportunities to be had. First of all, SPX, S&P 500, broken out, risk on. Cable, broken out, risk on, above resistance. That would mean that the euro would have broken out too, right? Wrong. Euro has failed to break above its resistance. So what does this mean? Is the euro lagging, or is the British pound getting ahead of itself? This is our opportunity. This is what is presenting itself. Depending on how the markets open Sunday night, Monday morning, depending on either the positive or negative news coming out of the EU summit regarding the Europe debt crisis and any more details as to some solutions, we've got either a short position on cable if it does turn out in fact that this is a false breakout, or if we have positive news and the risk rally continues, the euro has some catching up to do. It still couldn't break out of the highs of the earlier in the week. So let's on Tuesday, Wednesday, Thursday, that's Monday's high was at 139.07. If we look at cable, on Monday it was down here at 158.47 and closed the week at 159.62, more than 100 pips higher. So you can see the discrepancy there. Now, these markets have been highly correlated over the last couple of months, really aligned. So this sort of divergence, not common, and something to take advantage of. So here, another risk currency, the Australian dollar against the US dollar. This has been moving really closely with the S&P 500, correlated very closely. Look, no breakout. Now, the Aussie dollar, the Kiwi dollar, these are the currencies that you would expect to confirm a risk move. They're not confirming the risk move. This is why you have to be very careful. We can't say risk on, broken out, here we go, let's get happy with the bulls. We still need confirmation. If we get some positive news from Europe, if we get further strength, these laggards, Aussie dollar, euro, they've got ground to make up. So there could be opportunities there to the long side. Alternatively, if we get negative news, we've got our cable, we've got the S&P 500 that could drop back down. Remember, false breakouts, when they reverse, often reverse very quickly. Okay, something else to talk about that gives a little bit further evidence that perhaps it's not a purely risk-on move, and it's perhaps more related to selling of the US dollar. We have our two other major currencies here, dollar yen and dollar Swiss. Let's begin with dollar Swiss. As we mentioned last week, closed the week right at this support, former resistance, new support, and it did bounce the first half of the week. Maybe 100 pips or so. Let's see here, bounced from support at 89.26 and got up there to 90.76. Yeah, so 150 pips. However, when this dollar selling happened, a lot of money came in for the Swiss franc. So you can see here we've got our broken support, and we've got now our fibs, our MAs as our next support targets. Head and shoulders pattern broken to the downside. So yes, something to watch here. I think if this 23.6% fib goes, you're looking down here further, or even down to here before you're finding support. It could have much further to go. Much prefer to be short this one than dollar yen. This is what we've been talking about for weeks and weeks and weeks. The floors that we had set in place. Well, this week we got caught out on Friday. Failed to bounce from this floor. First time in, since we moved the floor actually, and it continued down. Now, this is a record high for the yen against the dollar, and the Bank of Japan and the Finance Ministry in Japan have come out and started to make those same noises that we've been hearing before about they will not be standing for this sort of strength in the yen. Now, they've attempted to intervene before. As you can see, there was one here that had a bit of an effect, but immediately the yen was bought back. So dollar yen, obviously inverse, drops. So the risk of playing this to the short side, the risk of the Bank of Japan intervening to weaken their currency is too high for me, for my tastes. But it really is a classic breakout there. So what are we got to do here? Well, for me at the moment, dollar yen, I'm leaving it alone. I'm inclined, if we can claw back some of this losses, I'm inclined to get back long from this 76.50 level. But there is every chance that Bank of Japan could intervene as soon as next week to really weaken this yen, which will see this break to the upside. So that's a bit of a wrap up of what's happening. I think the key thing to watch early in the week is our divergence here. Euro failing to break through resistance, cable really busting through that resistance with a strong move, which was mirroring the move on the S&P 500. Euro and the Aussie dollar, which you would really expect to mirror the S&P 500, not so much. Euro, you could argue, okay, yep, the debt crisis, the risk, everyone's not keen on buying the euro. There's still a lot of doubt there. But the fact that the Aussie dollar hasn't mirrored that breakout, it gives me some reservations about the conviction of the move. Once again, early Monday morning, look for the news headlines on the website. It'll all be here regarding what's coming out of the EU summit. We're already getting some headlines. Merkel expects breakthrough Wednesday, but once again they're putting it off. First it was Sunday, then it was Wednesday. But let's see if it's further can kicking, or if we get some sort of detail in addition to the trillions that have already been announced. So I think that's it. Yes, but definite opportunities here, particularly with the Aussie dollar, cable, and the euro. Keep these three on your watch list. Watch them like a hawk when markets open Sunday night, Monday morning, and be ready to act. Let the market dictate the direction and simply position accordingly. See you all next week. I'll update you then. Bye for now.